IPO is like that. A lot of people thought it's profit. No, you do not need profits. You also do not need assets. What do you need to go for IPO? If you don't have profits and assets, what do you need? The ability to sell shares. Create a valuation. Okay, the ability to sell shares. But then it is my job to bring you out of your what? Suffering. Okay, from this world to this world. Don't compete. Collaborate. Can or not? Be more open to work with other people. Okay? How do you collaborate? Because if you do not collaborate, currently you're like that. And you're not like that. A lot of competition around you. A lot of small competitors, right? Jojo your market, Jojo your price, right? After that, behind you still got a what? Competitor give a lot of promotion because they got a lot of money. Right? So you are every day in this world. So I'm going to rescue you out from here. Those who raise your hand. Okay? How do I do that? You work with your competitors. A lot of you think that you cannot collaborate with your competitors for fear of leaking out your trade secrets. Am I right?
We have to get ourselves what? Get ourselves what? Public listed. Agree or not? So this is how it works. So are we interested to grow from small to be a medium-sized company? Grow from medium to large or not? Are we interested? This is business growth, right? Control the value of your company. The company is like your child. Do you follow? You build and have command. Will you let somebody determine the price of your child or your son or your daughter now? If you have a son and a daughter, somebody say, hey, I want to buy your son. How much is your son? You understand? They tell your son worth 1 million or 2 million. Will you sell away? Don't let others decide the value of your son, your daughter, and even your company. Decide yourself. So, gentlemen, does your company have a growth story? Yes or no? If you do not have a growth story, then how are you going to have a good valuation? The first IPO. Okay, so the traditional IPO is about seed funding, angel round, A, B, C, D, E, then IPO. Correct? That's the traditional route. And you will find that it doesn't make sense. So for PIF, we are against the unicorn idea. But we don't like unicorn. You know why? When you are 30, you have 50 million. You can raise 5 to 10 million. Get yourself IPO because even if a $5 to $10 million company is good for you. Agree or not?
So for those who are going IPO, if you do want cash out, it's legal. You just have to inform me. Okay, if should I be the one that do your IPO, just let me know how much you want to cash out from your business before you go IPO. We can plan for that. Yeah, as long as all these are made transparent and public, it's okay. Because Anthony done cash out, so he got money to buy what? He got money to buy good price envelope. But for you, you only know how to take money from where? Your business. So can you take money from business? You cannot. Because when you take money from your business got no capital to grow. Am I right? So that you are dead. You cannot cash out. So you are always in the back vicious cycle. The more harder you work, the more you cannot cash out. Because you grow bigger and bigger, you will never be able to cash out. The only way to cash out is to have what? Another reason. Create a valuation for your business. Okay, which is this. Create a valuation for your business so that you can cash out. So that you can have more capital, you can have more money in your bank. The money in your bank has got nothing to do with profits. Agree? Some of you may make a lot of profits on your paper. No money, why? Because you give out a lot of what? Credits also. Right? You give a lot of accounts receivable. Right? Especially in the construction line. Right? Same thing. So it is not what you think. Okay? So conventional entrepreneur, we are not focusing on profits, we are focusing on what we call valuation.
We want to get into the capital market. Okay? Unless you are a what? A tech company where you use user base for your valuation. There are few ways that you can evaluate your valuation, right? Either use user base. So if we really want to learn, okay, how to build a bankable business model, we must understand what is business model. Look at the top. We must always learn from the top people. Agree or not? Look at the Fortune 500 companies. Okay, all because the Fortune 500 companies, why they can get to the top up there? They don't climb to the top by coincidence, by accident, or everything all planned for one. Agree? So how do you plan for yourself to grow from here to up here to even up here? So ladies and gentlemen, when you are in a small profit margin business, you got to think how to how to go up already. You got to upgrade your business model. Agree or not? That means you make use of investors to buy your shares so that you got resources to grow the business. Capital mechanism model. That is capital entrepreneurship. This is what we are promoting.
So start designing your organization chart. But don't design your organization chart with the people that you have assisted. Design without them in mind first. Design your organization chart without filling up the names. Design it because you need to execute the business model. After you design your organization chart, then you fill in the name. If you already have the staff suitable for the position, then you fill it up. You don't design a position based on the staff that you have. You design based on the business model that you have designed. So how do you identify the right people? A lot of times, business owner also fall into the trap. And when you see a talent, you like the talent, you get attracted by the talent, okay? Without assessing whether are they suitable or not. What? How do you assess the suitability? You bring an MNC to an SME, you are dead. Because MNC has got everything. SME need to do everything. Agree or not? SME is PSPH, right? Usually no specialization one, it's generalization. But MNC is specialization, you do one thing, means one thing. Okay, and they got a lot of more pushing. So the culture is one thing. Suitability. Okay, you must find the person suitable. Your vision, your value system will determine what is the company's culture. Right? Okay, so two ways you can find your talent, okay, by becoming your PA first. Then before you deploy them to the respective position, okay, so that they will experience all the department, that's one, company as a whole. Secondly, they know what is the boss direction, so that they make the right decision. Alright, you are the CEO, I'm the chairman. Usually CEO do all the shit. The chairman is what? See nothing, see no evil, hear no evil, speak no evil, every day just what? Happy go lucky. Hello, how are you? Come, give me your birthday, I calculate. When are you lucky? When will you have money? This one you do. Every day just hobbies, right? Do his work, his hobby, and then the CEO got to work all the job. Am I right? So we say that this world you may be making a lot of profits. You're a Ferrari, but I put you in the jungle, you're dead. Your Ferrari cannot perform. You need a pair of wings here. This world fly around. So I see Gopal now into the. He's fascinating in that world. Right? He's flying from here. He's moving from here. I can feel that his energy is from here to here already. He's starting to enter this world and starts to have the kind of feeling that it's so fascinating. Oh, it's like that one. This world can like that one. It's the right feeling. Because I say we cannot be one dimension. You see, our shares we can slice them into 3 dimensions, 3 areas. A lot of money to be given. Because I give shares. But when you give cash, you are limited. When I give shares, I got a lot of ways to give. Once I issue box, I got shares to give already. Right? So I can have a lot of partners. Very interesting, right? So don't fall back to this mindset. Losses has got nothing to do with valuation. And even if you want to take care of losses, Dr. Raymond, you must tell the investor all these so-called losses are in the financial term. To a professional, we call this called sunken investment. There are business, okay, hockey stick business. My business model is a hockey stick business model. Okay, I will make losses until I meet this, then end. Then when I shoot very fast and very high. You understand? Then if you want more money, don't go for the percentage, go for the valuation. Right?